They have told Schneiderman in New York to pound sand, basically. They're trying to dig into all the market making that goes on in these exchanges, and they want to know how price discovery works on these various exchanges. And so all these exchanges are saying, look, we're a post-regulatory framework. We're a post-fiat currency framework. We're entering a new era. We don't need the SEC, the CFTC, any of these regulators, because we're taking this thing to another level, and it's based on a whole different valuation model. And just to give you some context of my history in all this and how I got into it, was back in 1995, 1996, I started a company in Los Angeles called the Hollywood Stock Exchange. And we were trading virtual assets with a virtual currency on a virtual exchange. And to build that technology, which was pretty new at the time, I had to invent a technology. So I invented a technology called the Virtual Specialist Technology. It has a US patent. I think it's 5950176 is the patent number. And so we were having to do price discovery on virtual assets. This eventually was sold to Cantor Fitzgerald in 2001, and they moved the entire thing to their office in New York, the top floor of the World Trade Center, a few months before 9/11. So there was an inability for them to really capitalize on that going forward. They wanted to introduce box office futures contracts, and I told them at the time that this would never happen. You would never launch box office futures contracts because the MPAA, the Motion Picture Association of America, is a very guarded monopoly in the United States without any competition. And they don't like the idea of price discovery on box office. They like to control that market with an iron fist, the 6 studios in Los Angeles. And sure enough, they didn't listen. They spent $20 million trying to develop a box office futures contract. And at the last minute for the Dodd-Graham bill, or is it Graham-Dodd? Or is it Graham-Dodd? They introduced a rider into that law saying outlawing box office futures contracts. So Hollywood is the only industry in America that has this kind of protection from financialization. You can't trade a box office futures contract, but you can trade futures contracts on almost every other industry in America because they don't want the competition. They don't want the price discovery. They don't want to interrupt the flow of their model to market their way into a box office event. And I find this a bit disturbing because it says that free market economics and price discovery is selective in America. We like it in certain markets, but not other markets. And being in the news business as I am, we're constantly butting heads with regulators who are trying to tell us which news is approved by the regulators. So this idea of free market capitalism being selectively applied to some industry and not others is now also applied to the news business. So some outlets, their news is considered to be more truthful than other news, and they don't allow the public to decide what they want to see, and for the public to make up their own mind about what is informative and what is relevant to their lives. Another word for this would be propaganda. So we live not only in a price propaganda and a fiat currency propaganda, but we live in a news propaganda. The major outlets in America are into the most insidious, vicious propaganda and warmongering than we've seen in decades. The idea of free...
So I love Max Kaiser. He speaks the truth, and like I said, it's really refreshing to have someone like that. You're not going to see it on mainstream media. And how it relates to crypto is the influence of the markets, especially the media on cryptocurrency. I do feel like a lot of this bear and bull market for crypto, because it is so volatile, is controlled by mainstream media. And that's why when there's sometimes we have these crazy pumps, there's no fundamentals behind it other than the media just blowing up random events. And like I said, I do feel like a lot of this is just manipulated. And he's going into much more deeper ideas and deeper thoughts. I'm not going to go there. I'm not trying to be political. But it is very important to realize that if you are investing in cryptocurrency, especially when the market cap is under $1 trillion, and even though it's a global asset class, there's a lot of influence on the media. But the easiest way for you not to really get into this or to not have to care about it is be a long-term investor. If you're a long-term investor and you're holding crypto long-term, you really don't have to worry about it. The media can only influence short-term prices, and if you're a short-term investor, you have to worry about it. But if you're someone who's going to commit to maybe investing for over a year, 2 years, 3 years, if you go look at the historical returns for cryptocurrency and Bitcoin, if you hold for 2, 3 years, it's usually very, very solid. And obviously, if you're investing what you can afford and you're not going to have to mortgage your house or lose all your assets through bankruptcy if you put too much into crypto, then I can totally understand. So let me know what you guys think. I'm going to continue to share a little bit more of this episode. It's episode 1221 on the Kaiser Report. I think it has a lot of great information on cryptocurrency and central banking. I mean, the one reason I love sharing Max Kaiser is the fundamental problem we have with central banking, and that's the main reason why I'm investing in cryptocurrency. Thank you very much for watching, and I will talk to you guys soon.